Good morning, and thanks for coming out for the early morning session today. As Dan mentioned, this is an industry that is rapidly changing, but in fact it's an industry that has been rapidly developing since it began. So I direct the Energy Institute at Colorado State University, where we have about 230 faculty members working very broadly in energy. About 30 or 40 of those work actually at our Powerhouse Energy campus, which is a unique facility focused on developing and implementing large-scale energy solutions. We do technology development, but also work on fundamental energy science, energy policy, human behavior, and then we have a very strong focus on developing solutions and using entrepreneurship to get those solutions implemented at scale. Our work includes work in oil and gas, in renewables, in electric grids, and a fairly strong focus on energy access in the developing world. A lot of our focus is on solutions. So we have one of the largest electric grid labs. It actually was the largest until NREL's ESA facility came online 5 or 6 years ago. And that was originally funded by the government of Denmark to figure out how to use wind energy more effectively in Denmark. Our work in oil and gas, to me, goes way back. My grandfather was the first metallurgist for Halliburton. He worked on the development of the hydraulic fracturing equipment that was used for the first hydraulic fracturing job in Oklahoma in 1949. My dad worked for Halliburton for a while. I had a little stint there in college. But a lot of our work now has been with the, when I came to CSU in '88, we've been working with the natural gas industry, originally with the pipeline industry, and the solutions, and most of that focus has been on developing solutions to reduce the environmental impact of producing and utilizing natural gas. The solutions we developed for the transmission industry are essentially implemented on every engine on the transmission on the pipelines, and in the aggregate that reduces NOx emissions in the U.S. By the same amount as removing about 150 million automobiles from the highway. We have more recently done a lot of work on methane emissions, both characterizing emissions, developing solutions. We also operate what's called METEC, the Methane Equipment Technology Evaluation Center. It was funded by the Department of Energy to test technologies for detecting and quantifying methane leaks from oil and gas production. But a lot of people just don't really understand how hard the industry is working to continuously improve their operations and the pace of how fast those solutions are being developed and implemented. And that's really the topic that we want to explore today. So we've got a great team we've pulled together to explore this topic. I'm just going to introduce them briefly. Jill Engel-Cox is the director of JICEA, the Joint Institute for Strategic Energy Analysis at the National Renewable Energy Laboratory here in Golden. Richard Jackson is the Senior Vice President for Operations Support for Occidental Petroleum, where his portfolio includes a number of activities around managing and monetizing carbon dioxide and greenhouse gas emissions. And Jeanne-Mey is Executive Director of Energy Transitions and Clean Energy Solutions at Baker Hughes. So the format is that each of our panelists are going to begin with some introductory remarks, but then we want this to be a conversation. So what we're really looking for is you to participate in the conversation by providing us with questions. So at every table, there's index cards. So the process is write your questions on the index card, hold it up, and the KOGA staff will come around and collect those and then provide those to me so we can carry on the conversation. With that, we want to jump into the program. So our first speaker today will be Jill Engel-Cox.
Thank you, Bryan, and thanks to Sarah Reynolds and KOGA for having me here. As Bryan mentioned, I'm the director of the Joint Institute for Strategic Energy Analysis at the National Renewable Energy Lab. For those who don't know NREL, we are just about 15 miles west of here in Golden, Colorado, and we are one of the 17 U.S. Department of Energy national labs. We have about 2,000 staff that are working on the full suite of renewable energy and energy efficiency. And that includes wind, solar, obviously, but also geothermal, biomass, hydropower, batteries, fuels like hydrogen. We're looking at buildings, transportation, power sector, the complete set of renewables. When I talk about renewables in my remarks here, I'm not just referring to wind and solar. I'm referring to all the different possible technologies in that space. We also do a lot of work around the integration of these technologies with our existing systems. That's through our analysis group and our supercomputer. We do both laboratory work and the analysis around the technologies. And then we're also considered one of the applied labs. So we work with cities and states and different countries and a lot of industries and utilities to help them understand the technologies, where they're going, what the new technologies are, and try to figure out how they're going to fit into the energy transition that we're undergoing. So, in fact, as an example, recently NREL partnered with Shell to run a clean technology incubator. So Shell is providing funding to and collaborating with NREL to find new technologies to help in their energy business. And we also recently signed a $100 million agreement with ExxonMobil to explore new technologies such as biofuels, carbon utilization, and other topics. So we work very collaboratively with the energy sector of all types. My institute is a partnership of NREL plus 5 universities, including Colorado State University. And our focus is on the integration of renewables and other sectors. So we look at how renewables fit with oil and gas, how renewables fit with nuclear energy. We're also looking into manufacturing, industrial processes, agriculture. So we really work at that nexus, which is why I'm so excited to be here speaking to all of you. So my remarks are going to really focus on how research and development is advancing new energy technologies in response to climate and the environment, and kind of what we're doing in that area between renewables and oil and gas, and I'll conclude with how renewables and oil and gas can work together. So when you look at why we're deploying such significant amounts of renewable energy and natural gas now, it's really because research has helped us lower the technology prices so that they become extremely viable in the market. So if you look at solar, for example, when NREL was formed in 1977, 40 years ago, solar PV cells were $77 a watt, and they are now 12 cents a watt for the cell and 22 cents a watt for the panel itself. So we've seen a 99.9% price reduction in that technology. And that was really done because of the research that supported the improving the efficiency, improving the way we manufacture, lowering the cost of the materials that are in the technology itself. And we've also done, similar work has been done with wind turbines as well. What's interesting about that, and most of that cost reduction has happened in the last 8 to 10 years. And what's interesting is that by coincidence, or as I sometimes maybe by synchronicity, that is experienced at the exact same time that we've seen the price reductions and the technology advancements in natural gas through hydraulic fracturing. And so we have this simultaneous energy change with both gas and renewables, both significantly reducing price and significantly increasing the capacity. And in that sense, and you can see this in the percentage of electricity. Natural gas is now 37%, and electricity by renewables in the US is now 17%. That includes, remember, hydro, wind, solar, and all the full suite of renewables. And in Colorado, we are 30% natural gas-powered electricity, and we're closing in on 30% renewable electricity. It's over 20%, and it's working its way up. And if you think about Alice Jackson's comments yesterday about some of the goals by 2030, I think those will definitely be very achievable. But we have a lot of energy challenges yet to solve. We still have to think about how we're going to integrate high percentage of variable renewables, so wind and solar that are variable, not dispatchable. There's a lot of process heat requirements that we need to think about for industrial processes, and those are still done in very traditional ways. Are there ways we can make those more efficient? Cleaner transportation fuels, and the potential, if we do convert to electric vehicles, we're going to have a significant increase in the demand for electricity, and how are we going to meet that? And then I think it's very important that we conserve our precious oil and gas resources. As we've talked about, these are extremely valuable, amazing materials, and we should be using them for their high-value purposes. And so there is how we begin to use renewables in their highest value and use oil and gas in their highest value and combine these into a complete energy system. So for this, we really need cross-technology solutions. We need to think about things as a system and how we're going to have different technologies work together to lower our carbon emissions. So for example, we're looking at ways, if we have a large percentage of renewables, you have a lot of excess electrons, how could we use those to run an electrolyzer and create hydrogen, which can be used as a feedstock for industry. It can be used to convert back into electricity through a fuel cell, or you can use it for process heat. Are there ways we can capture carbon from different thermal power systems and then convert those to materials and new fuels? And could you combine that captured carbon with hydrogen to create syngas? Or there's also possibilities on renewable gas. So what's really exciting is I think what's really exciting about the future is how these technologies can work together. And there's a lot of ideas of ways renewables and oil and gas can work together moving forward into this system. So I just want to go through, my final comments are just a few ideas that hopefully will spark some questions and conversation. So we're starting to look at how you can improve the operations of oil and gas operations themselves through electrification of drill rigs and other upstream equipment to reduce emissions, noise, and costs. And those can be powered through the grid, or how can we create mini grids and actually optimize the power demand for upstream oil and gas production? Looking at the midstream, can we look at electrification of renewable powered electric motors for compressor stations and pipelines, also using microgrids, and also can we capture the waste heat from those systems and repower the systems themselves? Refineries are going to be much harder to address because they have very high power requirements and high thermal demands. So again, as I mentioned, renewable generation for hydrogen could be integrated into the refining process as also waste heat recovery and cogeneration. Offshore, looking at wind-powered oil and gas rigs, combining offshore wind with oil and gas production. Actually, people in Europe are looking at this already in the North Sea, also run by microgrids. And then there's a lot of ways, that's a way that we can integrate with the operations. Then there's also the production, blending, shipping of syngas, renewable gas, hydrogen, related fuels, carbon capture, CO2. All of that is expertise that the oil and gas industry has that the renewable industry can work together with you collaboratively. And then lastly, in terms of energy, geothermal power is something that we are doing a tremendous amount of research there. It's a very traditional energy source, but there's a lot of exciting new applications with combining hydraulic fracturing with geothermal for enhanced geothermal systems, another exciting area for renewables. So we are actually at JICEA starting a consortium of oil and gas companies and renewable companies that are interested in doing the detailed modeling and analysis of incorporating renewables into oil and gas operations. We have a number of different companies signed on to collaboratively work on doing this modeling. So if you're interested in joining the collaboration, be happy to talk with you about that as well. Baker Hughes is one of our collaborative members, as well as a few others, and so we'd be happy to have that conversation about how you can join this collaboration and work on finding some solutions together. So thank you.
Richard.
Great. Thank you very much for allowing us to be here and talk about this topic. It's very exciting. Introduce myself again briefly. I work as a president of our Low Carbon Ventures. My background is core oil and gas. Walking through history, I started on a drilling rig. I tell people a lot I'm the walking industrial revolution. I moved from a drilling rig into asset management, found my way to investor relations, spent a lot of time in New York, and now picked up our low carbon business. But excited about what we have done as an industry around things like technology and innovation. It certainly attracted me to the industry. It has kept me in the industry. And I think when we look forward with the right lens, it's pretty exciting what we have in front of us. In terms of Oxy, we're an international oil and gas company, strongly focused in the U.S. We do work in the Middle East and Latin America. We're excited to be back in Colorado as part of acquisition and merger with Anadarko. And so we're excited to work with all you. The assets and the people here have been very impressive. So we have a great team here. They've done a great job, but we're really excited about being a part of that. I thought what I might talk through a little bit is how we think about the energy transition. I'll make some connections to what Jill had discussed in terms of technology application, because I think as a oil and gas company, and certainly as Oxy, we see ourselves as applied technology and commercialization at scale. And then talk about how we view really a growing low carbon business. And this is one I think we all can participate in some way. So, the core of what we think about in terms of a low carbon business, I think it's been a part of good oil and gas operations for 100 years. You look at being able to control emissions, which is really delivery of product or operational uptime. These are things that have contributed to margin for our history. Energy efficiency is a growing topic that is important. Most of us know we pay a lot for electricity as part of our operation. Being able to deploy technology, look for more efficient ways to do that is certainly, again, a good business. But what we're seeing is a lot of technologies, as Jill described, where this can go beyond that. And so I think different strategies and different approaches are good, but it's an interesting growing market. For Oxy, we've been a large consumer of CO2 for over 4 decades. In fact, we're the world's largest CO2 enhanced oil recovery operator. This is a process where we take CO2, which is mostly naturally developed today, but I'll talk through how we're transitioning with that approach. We inject it in liquid form, and it helps the recovery of oil from our existing reservoirs. The beauty of that is that we can double our reserves. We can do it in existing infrastructure that we've already invested. And the byproduct, which we're really growing to appreciate, is that we consume a lot of CO2 during that process. So much, in fact, that the byproduct can be a carbon neutral or even negative barrel of oil. And so when we think about a growing low carbon fuels market, liquid low carbon fuels is a great opportunity for oil and gas. Again, scale, for us, just in the Permian, we have over 1 million acres of conventional enhanced oil recovery. Even larger than that, and I think this will go into our discussion, is our infrastructure position. So we have over 2,500 miles of CO2 pipeline. So we have 13 gas or CO2 separation plants, and we have over 2 billion barrels of resource in enhanced oil recovery. Beyond that, we've deployed CO2 in unconventional and believe we have technical success with enhanced recovery. So as we put this story together, we think about what that can mean from an emissions reduction standpoint. Today, we sequester about 18 million tons of CO2 a year. For those of you who work in cubic feet, that's about 1 BCF per day of CO2 we store. We can do 2 or 3 times that in the next 5 to 10 years. The challenge is how do we take emissions and separate CO2 in a cost-effective way. In terms of scale, again, that's around over 4 million cars equivalent emissions per year, what we do today in one area. So we're very excited. As we looked at this, we did want to back up and think about this larger connected low carbon system, and we didn't want to miss anything. And so we looked everything from renewables to nuclear to things we thought we would never get into, but we really needed to understand how the future of energy looked. we began to technically dive into CCUS. The technologies that we're describing are very similar when you look at a refinery and how do you separate CO2 from flue gas to what we do in our operations to separate CO2 from oil and gas. And so we knew that we had this as a core benefit. But we really simplified our approach, and so I'll walk you through the framework. We look at our low carbon business, and I would tell you beyond really our Oxy business from 2 frames of reference. One, how do we deploy technology and do projects that make our business better? We're a mature industry. We have large shareholders. Many of us pay dividends, and so shareholder return and understanding of these projects is important. So that's number one. Number two, we do feel the need from many perspectives to reduce greenhouse gas emissions. So it's simply make our business better, let's reduce greenhouse gas emissions. So as we worked through our strategy, we really ended up in 3, I'd say, focus areas and 3 business channels. One is direct emissions. If you look at a barrel of oil that we produce, the emissions associated with our operations are actually quite small to the total emissions associated with that barrel. But that is the most important first step. We believe that we as industry need to take a leadership position on our operations, and I think we've done a great job of that. Whether it's deploying technology like electric rigs or operationally putting systems in place to measure and fix emissions, I think we're doing a good job, but we know we can do a lot more. Second is energy efficiency. And that again is around not only the type of energy that we use, but the efficiency in which we use it. And then third for us is CCUS, or carbon capture, utilization, and storage. And we really look at that in 3 aspects. One is point source emissions. So we are actually partnering with industrial sources in areas like the Midwest or the Gulf of Mexico across the industrial and power sector. We've invested in technology which is direct air capture, so the ability to actually take it directly from the air at 415 part per million and separate it. And then an exciting one is utilization of CO2. So where we have, as Jill described, the intersection of emission-free electricity and CO2, there are many products that we can create. The business channels are really technology, and then projects, which is about 75% of our resource deployment, and that's commercializing these technologies we'll discuss. We also started a technical services group as we looked at sequestration of CO2 and realized that our long-term history in enhanced oil recovery could really help with how to approach subsurface safe storage of CO2. So finally, just a few comments on what we're doing to further help set the stage. I think in direct emissions, we are looking at technologies to support our business units on finding, measuring, and fixing direct emissions, and that comes through lots of different technologies and operational approaches. In energy efficiency, we are deploying solar. 2 projects I would highlight is one, a direct connect solar project to a field in our Permian operations, and one is a large-scale support in a operation in Oman. We also invested in a zero-emission gas power generation technology called Net Power. The byproduct is zero-emission electricity and CO2, and so we see that very central to our strategy. In terms of CCUS projects, we do have a deadline. We have some incentives in place to do these by 2023. From a business standpoint, we would like to see this done over the next 5 or 10 years. So we have a ethanol facility in North Texas that we're in the middle of finalizing financing. We have projects in the Midwest and the Gulf Coast. Direct air capture, we announced a 500,000 ton per annum direct air capture plant, which will be commercial in the Permian by 2023. And then more to come on utilization of CO2. So again, excited to have this conversation. I think it's a great panel to cover a lot of areas, and look forward to working again in Colorado.
Great, thanks. Jeanne-Mey.
Sure. Thank you.
Good morning, everyone. I'm Jeanne-Mey Sun, and I'm with Baker Hughes, as Bryan mentioned. Very glad to be here and to talk with all of you today about this very important topic. For those of you who may not be familiar with Baker Hughes, we're an integrated oil field product and services and digital solutions provider to the up, mid, and downstream parts of the value chain, so across the entire oil and gas value chain. We have 60,000 employees around the world and operate in about 120 countries. Our purpose is to invent smarter ways to bring energy to the world. And so if you think about that purpose, what does smarter ways to bring energy to the world mean? Well, for us, it must include minimizing carbon footprint. And indeed, that's at the heart of our strategy. We believe climate change is a major global challenge, and that we, as the broader oil and gas industry, must play a part to reduce it. So what are we doing as a company? So in January of this year, we made the commitment to be net zero in our operations from an emissions standpoint by 2050. We've already reduced our footprint by about 34% since 2012, which is our baseline year. So we're on pace to achieve that target. Our net zero by 2050 goal is aligned with what the Intergovernmental Panel on Climate Change believes is necessary to keep global warming within 1.5 degrees in the post-industrial period. And our commitment specifically relates, as I said, to our internal footprint, which includes things like our manufacturing processes, our facilities, our fleet. But we also want to be a net zero partner to our customers, companies like Oxy and others, meaning that when we serve them with our products and services, we want to have a net zero footprint for them and for us collectively. And then finally, we want to grow into new energy areas. So why are we doing this? Well, we think that commitments like ours will fundamentally improve the competitiveness of the oil and gas industry and of oil and gas in the energy mix. Right now, as we all know, there are many people outside the industry who think that oil and gas are inherently dirty. However, it is not oil and gas per se. It is really the emissions from oil and gas that we need to be combating and reducing. And so if we can steadily reduce our emissions, we will effectively remove one of the main impediments to the competitiveness of oil and gas in the energy mix and put it on a more equal footing, again, from an environmental standpoint, with all of the other elements of the energy mix. We'd basically be able to say to energy consumers and society at large, you can use oil and gas knowing that it has a low and a reducing footprint, and in the limit have a zero impact on the environment. And then people will be looking at oil and gas purely on its cost and its performance basis, which is really what we want people to be doing, and not getting entangled into the environmental impact. And we think that'll really take a weight off oil and gas as it's perceived today by the outside. So at Baker Hughes, we believe our technology can help the industry decarbonize, and I'll provide a few examples of that. But first, I'd like to ground everyone on the sheer magnitudes of the problem that we're dealing with and how that has led us as a company to focus on specific types of technology. I don't think that's been addressed today, or yesterday, and I think that's super important. So starting with the big picture, global emissions from all sources, about 50 billion tons a year, metric tons of CO2 equivalent, and have been increasing steadily. The oil and gas industry directly, and by directly I mean up, mid, and downstream, not the use of oil and gas products, is about 10% of those 50 billion tons. So about 4.4 billion tons per year is what we've estimated. That breaks down to about 60% from the upstream, 30% from the downstream, and the remaining from the midstream. Within the upstream, the biggest single contributor is upstream processing, which is due to energy consumed in things like oil, gas, water separation, associated gas venting and flaring, gas processing, and water treatment and disposal. Another way to segment that 4.4 billion is by the type of emission. About 44% is combustion related. Another 46% or so is from venting, flaring, and fugitives. And the remaining 10% is land use changes. So I mention these numbers again because our technologies are designed to reduce all of these types of emissions. On the venting, flaring, and fugitive side, for example, we have several technologies. One I'll mention is called Lumen. It's a full suite of methane monitoring and inspection solutions which runs on solar power. We have two systems. One is a stationary system and one is a drone-based system. And they each quantify methane leak rates and concentrations on a 24/7 real-time basis. And we get live data from sensors that are streamed to a cloud-based software dashboard for real-time results. The Canadian government recently asked to use our system so that they could compare the emissions factors that they're using, which are averages and assumed factors, against empirically measured methane emissions at specific sites for specific types of equipment. And as you can imagine, the results were very, very different. So we're very encouraged by the fact that governments and industry players are increasingly interested in knowing that very precise measurement, which has not been possible in the past. Another system, Flare IQ. So Flare IQ is a flare management system that allows downstream operators to reduce flaring. We've estimated that it would reduce, on a per flare basis, about 12,000 metric tons of CO2 equivalent per year per flare, which is about a 90% reduction. So if you think about all the flares around the world in refineries, in petrochemical plants, we estimate that that type of system could reduce emissions by about 190 million metric tons of CO2 equivalent per year. And the good thing about this is that not only do you reduce emissions, you also reduce costs associated with things like steam production. I'll mention another system. We have something called modular gas processing, which treats and fractionates flared natural gas to produce dry gas, propane, and condensate. If deployed, it actually eliminates flaring from what otherwise would have gone into the atmosphere and monetizes gas that is very useful for things like power generation. And we're currently deploying a system like this in Iraq, which will really help their domestic power generation. We have something that is a zero bleed valve system. So many of you have probably heard that a big source of venting is pneumatic valves that actuate natural gas by design. And so with our zero bleed valve systems, you can effectively create a closed loop system where that vented gas goes back into the system and not into the atmosphere. And we estimate that that would avoid about 25 tons of CO2 equivalent per year per valve. So if you think about the sheer number of valves that are out there of this type, that's a very material reduction. On the combustion side, a couple of examples. So we have a gas turbine which allows for LNG train startup without venting process gas. It eliminates water use in emissions abatement, and it reduces NOx emissions by about 40%. And overall, there's about a 20% lower cost of total ownership. We have an integrated compressor line which provides zero emissions compression for industry-wide applications. And we also have another turbine which helps to power frac fleets using field gas rather than diesel, which obviously you'd have to buy off-site and truck in. And so we've estimated that if on a per frac fleet basis, if you use that solution, you're reducing emissions by about 18,000 metric tons of CO2 equivalent per year per frac fleet, or about 23%. And that's not including the savings from having to, as I said, buy and truck that diesel in. And then lastly, very exciting, we have a turbine which we're working on in Australia, which will run on 100% hydrogen, so a no emission turbine. And then to Richard's point about carbon capture and use and storage, we have our own, or many, carbon capture solutions. The one I'll mention takes thermal energy from rich burn exhaust from engines that are already in the field and which would otherwise just emit to the atmosphere, and captures that rich burn exhaust, converts it into CO2, and in doing so reduces emissions by about 16,000 metric tons, or 60% compared to the no capture scenario. In addition, because you have CO2 captured near the well site, the emissions from having to buy liquid CO2 off-site and truck it in, those are eliminated, as well as the cost of having to buy that liquid CO2. So there's many more examples I could provide, but I'll stop there and look forward to the questions. But what I hope you all see from these examples is that there are ways to materially reduce emissions, and they're economic. So it's not a trade-off between the environment and economics. The two things go hand in hand. I think that was a point very much made by both Jill and Richard, is that, you know, if we want to adopt these solutions, they've got to be both economic and environmentally friendly, and we do see pathways already with many of the technologies that we have, many of which were never designed to actually combat emissions, but because of their inherent energy efficiency are already doing that. Thank you.
So again, this is a conversation. Please send us your questions, but I'll go ahead and begin the discussion. I think one of the things you've heard today is this this discussion about data and numbers and performance and metrics, and that's very different than you would have seen just a few years ago. We've seen both Baker Hughes and Occidental have very specific goals around their reductions. They have technology plans to get there. The question to both of you, and then I'll bring Jill into this, is the drivers for that. Are you seeing? Are your customers asking for this? Is the you're selling to the Occidentals, and the Occidentals are selling to the utilities and LDCs. What are they asking for? And as we talk about numbers, how do we certify those numbers? How do we have confidence that numbers claimed by different suppliers are really measuring the same thing?
Sure. Sure, I'll go ahead and start. So all very good questions. As you alluded, our customers, our major customers in particular, are indeed making their own commitments to reduce their carbon footprints. And they're thinking about it very expansively, both from a use of their products by the end user, as well as upstream in the supply chain, which includes partners like us. And so they've come to us very specifically and said, look, how can you help us to reduce footprint? What can we do working together? And so with several of our customers, we've actually sat together, we've mapped out the value chain that we both are in. We've quantified the emissions from our products and services as it relates to their operations. And we've prioritized working on specific assets, parts of the world, types of equipment, et cetera, to reduce the footprint from those. So it's very much being driven by our customers, and as you said, by their customers and by society at large. From a measurement standpoint, there's a whole, I was saying to Richard earlier, a whole arcane world of measurement. But to be very clear, we believe in transparency, we believe in quantification, and we believe in third-party certification. So we've actually undertaken a lot of work to document the emissions through the full life cycle of our products and services. So starting from the cradle, so if you're using steel to make a tool, how much what emissions are coming from the mining of that steel and the further refinement and processing of the steel, the transportation inbound to our suppliers, and all the way through our manufacturing facilities, and then through the use of that tool by our customers, and then the end-of-life treatment of that tool. So looking at that full life cycle, and that's really the only way that you can actually know the magnitudes you're dealing with, and most importantly, where you need to focus to continue to reduce your footprint. And there are standards that the International Standards Organization has put out for so-called carbon footprinting of products, and we are complying with those standards and having our measurement certified by a third party as having complied with those external standards.
So Richard, what are your customers?
Sure, I think very aligned. I think from a customer standpoint, we look at it through a few facets. I mean, certainly long-term investors are interested. They want to understand things like energy transition, where do you fit, what's the longevity. We believe oil and gas has a meaningful role for a long period of time. We also believe that where we can add to our product line, especially in a low carbon way, that the market's opening. And so I think that the intersection of those two thoughts are attracting capital. The exciting thing for me is the financial markets are opening up to deploy capital. We clearly have to take it from technology to scaled commercialization, but it's there. I'll jump to the certified numbers. I mean, we agree, transparency and verification is certainly important. One of the things we did, we worked with the EPA on what's called a monitoring, reporting, and verification plan for CO2 storage in the subsurface. And, that's within our greenhouse gas protocol, but we believe that's very important to be transparent in how that's done. Life cycle analysis is important. I described a business model where we partner with industrial emissions, buy their emissions, separate it to create CO2, and have a willingness to pay. A lot of the emissions, for example, an ethanol plant, they take credit for a reduced carbon intensity of their product. And so you have to be very transparent where that carbon reduction occurs along the life cycle. So these are emerging things. I don't think it's done by any means.
No.
You can imagine thousands of counterparties as part of these transactions of the future. And so there's technology upon technology that we're going to have to put together to really make this happen at scale.
So I'm going to ask Jill to comment, but first I want to layer in a question. And actually a question came in for Richard that I'm going to turn over to Jill. It says, a lot of the technology you described sounds resource and capital intensive. How do the progressions trickle or translate down to small operators? And Jill, you have partnerships with Shell and ExxonMobil. So I wonder if you could talk about this in the context of how NREL and the renewables industry can work with the operators here in Colorado, and how do we enable their progression?
So that's a great question, and I think it's important to look at companies of all sizes and types in the supply chain within the opportunities here. And while we have the agreements with some of the big majors to explore around very large new scale technologies, a lot of the work that we've been doing that's the highly applied in the field level is with the small and mid-sized operators. Extraction Oil and Gas is one of our partners in the collaboration as well, and in part because companies like that have the ability to be very flexible, to experiment, to do new things. They're often, especially here in Colorado, working very close to stakeholders in suburban areas. And so they're very interested in looking at new ideas and being able to implement and experiment with new opportunities. And so we do work with organizations of all different sizes to help explore solutions. And then also a lot of as was mentioned before, a lot of the solutions, they're commercially available technologies, but they haven't been applied in this way. So we're working to help figure out how to integrate them into the different operations so that and then look at that capital investment and how it can actually save money, because you want to maximize the amount of product going for sale. And so a lot of the technology solutions we're looking at that reduce emissions, reduce flaring, reduce the power the electricity demand that you have to pay for, that actually reduces cost and operations and typically has a very good return on investment. And the models that we run, that we help look at this, we can optimize for cost, we can optimize for emissions reductions, and we can optimize for resiliency in terms of continuous operations. And so depending on the need and the interest of the organization that we're working with, we look at these different optimization scenarios of the technologies, and we're at the stage where these technologies can be cost effectively used.
So I want to talk about how technologies are developed. So the question is, what is the share of new technologies sourced from internal R&D initiatives versus startups and incubators like NREL and from the universities? Are startups needed for more out-of-the-box solutions? And so I'll open this up to everyone. Where do good ideas come from? And do we need more of them?
I can start. I think partnerships are critical, at least for us, and I think for most. I think that we don't have a large we have no internal R&D program, so we seek to partner externally. We find that extremely valuable. I would extend it beyond technology to even finance. I think a lot of these business models and how do you finance it take pretty smart people putting that together. So we look for Baker Hughes, or we look for labs. We do investments with smaller companies. And you've got to be smart with your deployment of cash, but for us, that's been the most effective way to go. So partnerships to us are absolutely critical. Much of this we don't view as competitive on some things around a methane, and so where we can partner with everybody in the room to develop a technology around methane leak, that's great.
I would concur with much of what Richard said. I mean, we do have internal R&D. We do look at low carbon as a criterion for the research that we do, but we very much want to be partnering externally as well. We're quite active in the startup community in Houston and Silicon Valley, and entertain pitches from startups all the time. And we think it's very important to have an open mind and be exposed to as many ideas as possible. And in particular, also to be very targeted. So I know, for example, the OGCI, the Oil and Gas Climate Initiative, is having a very targeted carbon capture use and storage day coming up in a couple weeks, where they've invited companies to pitch specifically on that topic, and they're going to pick among the best to fund. So we very much support that approach as well.
And I would add that there's a continuum of research, and there's a lot of there's some of the very early stage research that's maybe down at the fundamental materials. What kind of new materials can we use from captured carbon? Some of those we're really still experimenting and trying to figure out what the chemistries are and how that would actually work. And that's really a great role for a place like NREL, a place like our other Department of Energy national labs, that early stage fundamental research. And then as it moves to maybe it's not fully cost effective, but we need to begin to think about how it would be deployed. That's when we collaborate with startups, we collaborate with larger companies that are interested in that funding and supporting that development stage. And then there's the actual applied end, where different types of organizations can provide technology solutions at the field level. So I think it's good to think about that whole continuum, because research will move through that and bring new technologies.
So final question is on the digitization of energy. This is an area whose rapid developments, everything from Internet of Things type approaches working their way down to well pads, and so this presents tremendous opportunities for control and efficiency. It provides some vulnerabilities around things like cybersecurity, and also layering in newfangled business models, things like cybersecurity. Can we talk about just where your organizations see this digitization of energy?
Sure, I'll start. I mentioned that part of our company is very focused on digital solutions, very much with the intent of optimizing everything throughout the value chain. So everything from where to drill, how to complete and produce, and transport and so on down the chain. So we fundamentally think digital is key as a way to optimize decision making. Now, in this space, as we've been talking about from an environment standpoint, we've also monitored developments that are trying to apply what I would call a digital signature to specific sources of hydrocarbons. So many of you might have heard that last fall there was a deal whereby so-called responsible gas was sold from Southwestern up to a utility in New Jersey because that gas had been produced according to certain standards. So we do think that digital will actually enable or continue enabling that kind of traceability through the supply chain, where buyers who care about the specific hydrocarbon that they're buying will actually be able to trace the carbon characteristics, if you will, of that resource.
Yeah, agree. Maybe just a couple of points to add to that. Digitization for us, I'd say starts and it has started in the field. I think we've had for a couple of decades a focus on automation, control, measurement, and I think that is really ramping up in our ability. Obviously, technology. For example, I was general manager in our Permian operations. We have over 20,000 wells. It's a lot of point sources, and so being able to manage that efficiently, not do it with a pickup truck for every well, is not only important environmentally, it's important from a business perspective. I do think as I described earlier, as we view the areas we're working and tracking carbon, you're going to have thousands of transactions around that, and so you've got to come up with a system that can handle that, trace it, and be transparent.
Yeah.
So we agree with that outlook as well.
Jill, anything to?
Yeah, just real briefly, the wonderful thing about digitization is that we're a bunch of analysts and researchers, so we're excited about all this data that's being collected and how we can use it to help optimize the system. So with digitization, you'll be able to collect information from and understand how different types of systems actually begin to interact, and we can use that data to really understand it and come up with solutions. So it's often a lot to manage, and that's probably the biggest challenge with digitization, but beginning to think about that modeling and systems approach using that data can really lead to some really interesting solutions.
Okay. So I think in summary, what we've tried to talk about today is the technology changes occurring in the industry and the fact that the rate of change is increasing. There's strong focus on how do we use technology to reduce the footprint of oil and gas production, and I think we can be confident that that pace of those technology development will continue. So, Jeanne-Mey, Richard, Jill, thank you very much for your participation today.
Thank you.
Yeah, thank you.
Thank you.
Thank you.
Thank you.